Welcome traders. In this video, we're going to go over today's trading session. We are currently looking at ES and the time frame we are looking at is the 2000 tick chart. Now, the only other supportive indicator I use is the 21 EMA, which is this purple line, and I solely rely on trends and price action to look for high probability setups. Now, looking at the pre-market session, we like to look for the lows and the highs, and as you can see here, we developed a trading range. Reason being, the EMA is flat, prices are reaching the support, bouncing, and the resistance and bouncing. Now, in a standard trading range, what we like to do is we like to sell high and we like to buy low. But in this situation, after the open started, this was all before the bell, we developed a nice uptrend. And as you can see, we started at the lowest pivot where the move started, and we're going to connect it to the other two swings, and we have a nice uptrend in play. Now, initially, what we are looking for is we are looking to take long setups as long as this uptrend is still in play. Now, let's say hypothetically, we break this trend line and we make a new high. This is a situation where we're going to pause looking to go longs and we can either expect a reversal or a consolidation. So starting where the market opened, we were still within this range. We were failing at the resistance and we were just going sideways. As you can see, EMA's in the middle of these bars. I personally didn't like to look for any trades here. I was looking for an additional push, breaking the resistance. And as you can see, we did break the resistance multiple times. And usually after multiple tests with a series of higher highs and higher lows, we anticipate the market to go higher, which it did here. Once we had that third swing, I anticipated the market to have a strong continuation in this range. And this is the first trade that I took of the day. Counting from this high, we have a new high, first entry long, pullback, second entry long. This was the first trigger before the previous candle. We had a break and a new low of the small downtrend. You have to wait for the mini corrections to play out. As you can see, we had a small downtrend, we had a break of it, a little bit of some broad price action, and we had a new low. Now, this was a second entry long here, decent candle. It did close above the EMA, strong body, and this was my first trade. Now, when you guys are looking to take entries, yes, we are looking to take long positions, but you have to make sure the small corrections play out before taking a long because we can have a continuation of the downtrend where we need a new low to be made and you can get trapped. After my trade, we ended up going sideways for a bit. As you can see, prices are in the middle of the EMA. So in a situation like this, you have to find the support, the resistance, and I'm drawing it out right here. And this is an area where you want to wait out. You don't want to trade the middle. What you're looking for is either a break below the support like we had here. This is called a failed breakout, a strong push above the EMA with a higher low, or you can wait for a breakout out of this congestion from the resistance like we did here. So as you can see, we broke out of the resistance. What we want here is a higher low, a candle that triggers lower than the previous ones, traps all the bears at the EMA. But as you can see, we didn't even touch the EMA here. And this is standard in a very strong market. As you can see, it's a very strong trend with minor corrections. So you can anticipate the market to have strong push phases. So over here, we ended up pushing stronger. Now, for any beginners here, we are definitely not looking to take trades unless they form at the EMA, especially for beginners. So if you see the market not correcting at the EMA, just avoid it until you learn more, or if we're in different markets like ranges where the EMA isn't as relevant. So what we're looking for is for price to correct at the EMA. We did correct here. We had a new high, first entry long, pullback. This would be the second entry long here. Now, the issue with this is same issue we had earlier. We did not touch the EMA, which is this purple line. As you can see, we did not touch it. So this is a no-go. If it had touched the EMA, this would have been definitely a good, decent setup. Okay, so we keep trending higher. We have another push phase here, counting from this high. We have a new high. We pulled back here, but we didn't break lower than the previous candle. That's what we're looking for. We're looking for first, counting from the high, a break higher than the previous candle. We had that, right? But then this candle didn't trigger lower than this previous one. So this wouldn't even count. And as you can see, we ended up correcting lower. We had a break and we had a new low for this downtrend. Now, Once we correct and we have a break and a new low, we are now waiting for a reversal pattern. What a reversal pattern is we're waiting for, counting from the low, price to trigger lower than the previous candle for it to fail and push higher. So this right here would be the first failed second entry long, right? Because I meant short. Because bears tried to short the market here, price here, and they ended up getting trapped and price pushed higher. So once we see that, now what we're waiting for is a failed second entry short, which is the similar pattern here, similar process, but we need it above the EMA. We did push above EMA, but this candle, once again, we did not trigger lower than the previous one. So this was definitely not a good setup. But if it had, this definitely would have been a great failed second entry short. Once again, another strong push phase. Over here, we have a second entry long. And let me explain it to you how. Counting from this high, we have a new high, first entry long. Um, and after I reloaded data, this did trigger higher than the previous one, so I counted as a first entry long. Then we pulled back and we have a second entry long. Is this a high probability setup in A1? I wouldn't say so, just because if we draw the small correction down, we could just angle it like this. The downtrend is still in play, as you can see. So, oops. So I usually wouldn't, but the rules vary on the bias of the market. When you have a very strong market like we do today, and the corrections are very minimal, then you can take setups that you usually wouldn't when it's like more of a choppy day, just because the bias and the bulls are definitely taking over the market compared to a day where it's choppy or we're in a range. So when you see a strong market, you can take weaker candles, especially because you definitely expect prices to have strong push phases like we did throughout the day. So this is a second entry long. If you took it, I see why. Definitely decent. We held above the EMA. The EMA is like a compass, as I like to use that analogy. It lets you know if price is going to respect it or if the correction is stronger. So as you can see here, we ended up holding up strongly and we ended up making a new high. It was actually a decent scalp, about 6 points here. Okay, so as long as this uptrend is still in play, we're still looking for long positions, right? As you can see, it's still intact, very strong. So we're still looking to take longs. All right, now we're getting around afternoon where the market is starting to slow down. Over here, we had no setups, nothing touching the EMA. Over here, as you can see, price isn't in the middle of the EMA, but it is going sideways. And once you train your eye to see it and the more experience you get, you could subconsciously acknowledge it. So as you can see here, we are in a range. And the same rules, a little mini range, the same rules that we applied before. We're not taking any trades unless we break out of it or we have a failed breakout from the bottom of the support. So finally, we did break out here, but as you can see, prices just broke through the EMA and sliced below it. Let's say hypothetically, price came to the EMA, held it, and we had a nice higher low holding above the EMA, you can take a long, right? But we definitely pushed under, so this is not a good setup. We pushed again higher, and this started to get late in the day around closing time. I usually don't like taking trades 30 minutes before the close just because we get a lot of volatility. And regardless, we just had a correction finally where the market and the buyers took profit. So let's say hypothetically over here, we ended up breaking this trend and making a new high. This is an area where now you would pause looking to take longs, right? Because we made a new high, you can anticipate a correction, a reversal, or a continuation. But throughout this whole day, this trend was super strong. It held the whole time, and buyers were having such strong momentum. Okay, so thank you guys for watching, and I'll be posting every other day during the trading week. Take care.